Hello, my name is Erin Swenlin from DecisionPoint.com, and this is your Daily 5 on StockCharts TV. Today, I'm going to show you 5 charts that I think you really need to see. And as the title did say, I'm going to present 2 ETFs, which you might want to use to take advantage of some of the moves right now going on in commodities. But let's start off with letting you know that I have a free trading room on Mondays. Just go to my homepage, decisionpoint.com, and you can see this little ad right here. Click that register now button, and you can join me in the trading room. Again, totally free. All right, so what I want to talk about today is taking advantage of commodities ETFs. However, before I get started, everybody knows that the DP alert gives me the overall market view, and then I have DP diamonds where I'm actually looking at stocks and ETFs. So we're going to do this in a decision point analysis way. We're going to look at the big picture, and then we're going to zero in just a little bit, and that's where we'll get to those commodities ETFs. Now, if you really like this and you want to see more, again, go check us out on our website. All right, this is the SPY as of this morning, right before I signed up here to record this for you. So as you can see, we lost some very important support last week, and we were able to right the ship, if you will, with the SPY making a nice move to the upside on Friday. Looks like it's up to its old tricks, though. We're down 0.75% as of this recording. The PMO, after the move on Friday, gave us a little bit of hope here because we're starting to see it try and make that turn to the upside. However, I would reference back to this point earlier in May where we saw an actual PMO actually turning up on the rally that we saw. And then we know what happened after that. We saw some spectacular failure, if you will. So looking at the rest of the indicators, the VIX still remains quite elevated. We do invert our scale. So oversold is on the bottom, overbought is on the top. And you can see that we did peak just above the moving average for the VIX, but it never quite got above and stayed above. When you see the VIX up above its EMA on my inverted scale, typically you're going to be seeing prices rising. So we don't want to see it oscillating below its moving average on this inverted scale. Of course, that means the VIX is at higher readings, and that means you're going to see more volatility. Another thing, though, that is looking up would be the stochastics, which have made the turn and are rising. But again, I have to point you back and settle you down if you're getting too excited, because we do see that the stochastics had done exactly what they're doing now. So we have to take this all with a grain of salt. And like I said, we had a really great day Friday. Everybody was ready to come back to work on Monday and see the markets flying higher. And that's not the follow through we're getting. Now, this also, because we're not getting this follow through, it didn't come through on our Climax analysis. Those of you familiar with Decision Point know that we look at some very short-term indicators, and what we do is come up with upside and downside climaxes that are either initiations or exhaustions. Now, it is an exhaustion type of an event, but what we want to explain is when we're looking at an initiation after a lot of high prices or an exhaustion or similar. So what happened Friday was we weren't surprised. Carl and I were not surprised at all. We ended up with an upside initiation climax. What do I mean? We had elevated net AD and net AD volume. We had the VIX popping above its moving average on our inverted scale. We had a volume ratio on the NYSE and a volume ratio on the S&P looking very outside of the thresholds that we look at. So we had a really strong upside move in that volume ratio. The only issue we had was that total volume was really kind of paltry, just really not there. We weren't seeing that confirmation of this upside initiation climax, but we still called it that. We still thought of it as a pretty strong one. But as we've been caveating with our subscribers, is that you'll notice when we have these more bullish signals, for example, an upside initiation, they really aren't resulting in a whole lot. This is an interesting one right here. This was a downside exhaustion. And so your expectation is higher prices. Well, sure enough, we got higher prices, but barely. And then we ended up right back into the decline. So our thought was we got this nice upside initiation, a lot of stretched out oversold conditions. It was time for a bit of a bounce. Got the upside initiation, but we're not very confident about it because we saw, any bullish type signal was failing. And so our expectation was, yeah, we probably could see some more upside, but more than likely, this is telling us we're going to see some consolidation, maybe a little chop and churn as we move sideways, maybe trickle up just a little bit on the rising trend, but ultimately fail. Why would we see it failing? One of the reasons is that the NAAIM, the National Association of Active Investment Managers, they report to us what their exposure is. And so what we do with sentiment, of course, is you look for everybody to be very, very bearish, because when everybody's very bearish, or you start to see that capitulation in the market, that's when you're going to start seeing those bottoms. And that's when you're going to start seeing those higher prices. Right now, the NAAIM exposure is very low, but not as low as we've seen at the end of some of these bear market phases. Now, I don't have the longer term chart, but I will tell you that we saw this type of exposure levels at the end of 2018, not 2018. Obviously, you can see what happened here, but we saw these very low readings prior 2008, 2010. So what we're looking for are readings that are very, very low. Now, I had written about this on this particular bar right here and saying that we just didn't have bearish enough sentiment. Well, we do have bearish enough sentiment, but again, I don't think, given what we're seeing here and given what I'm seeing in social media and given what I'm hearing on financial news, not everybody is bearish enough. And these active money managers are still laying themselves out there. And I want to see them moving closer to short side. All right, so we've talked sentiment, we've talked the market. We know that things aren't quite bearish enough. That tells me that I would expect more downside movement. But as I said, those climax charts are telling me that we're not necessarily going to see one of those really deep, ugly declines yet. I don't think we are completely out of the woods, but that tells me, okay, where can I find some exposure? Where can I put some of my money? Because honestly, right now, there isn't a whole lot of places to hide, but commodities are starting to look good. Well, they're not starting to, they've been looking good. But one of the things that I really like about commodities, this is GSG, the commodity ETF by iShares. And what I like right now about commodities, what I like about oil, wheat, a lot of these, is we had these parabolic moves to the upside, got the big breakdowns of those parabolic moves. And since we've been moving mostly sideways in a trading range, this is a commodities ETF, but I'll tell you what, this looks almost exactly like the USO chart. If you didn't have the name on the top and you showed me this chart, I'd say, oh, that's USO. It's not. But oil, we know, is starting to do better because it's done its consolidation and it's getting ready to break out. This formation is an ascending triangle. And so flat tops, rising bottoms, the expectations is a breakout to the upside. So I presented this to my subscribers on Thursday as a possible trade. We're doing pretty well here. It looks like we are going to get that breakout. Everything's going the right way. RSI positive, PMO is turned up, and we don't even have the buy signal just yet. So I'm looking forward to seeing that most likely this week, and stochastics rising strongly. So where's the other ETF I have for you? It is the US Gasoline Fund. This one is in kind of the same area as, UNG, natural gas, USO. So anyway, this is part of that group, and it's one I haven't really looked at, mainly because it does have very low volume. So I know a lot of you don't like to trade low volume, but I found this one and it really set me off. I thought, this is great. This is great. And full disclosure, I do own some. So you can see that same formation that we had back here on commodities on USO, but we got the breakout to the upside. That's exactly what I'm looking for on GSG and on USO. So we got the breakout here, and then we formed a bull flag, got the breakout above this area of overhead resistance. Again, this is when I presented it to my subscribers on that little breakout, and it's starting to look pretty good. And again, as I said, full disclosure, I own it. All right, that's all I have for you today. But before I go, would love for you to check out my website. If you want to try me out here for 2 weeks on my website, DP trial with the number 2 will get you 2 free weeks. And that's all we have. I want to thank you for watching your Daily 5.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.